The risk events video for the week beginning June the 7th, 2015. We are going to look at each individual day. There's one particular risk event standing out above all others, and we'll come to that in a moment. But let's begin with the 8th of June, which is the Monday, the 8th of June. You can see here we've got a few data points coming out, big data points. We've got Chinese trade balance. Again, hasn't really been moving the markets too much in light of the fact that it generally moves the Aussie dollar. And at the moment, Aussie dollar is being moved by RBA interest rate expectations above all else. So this Chinese data isn't too market moving at this time. That will change, but right now it's not having a massive impact on currency prices. We've also got the G7 meetings going on all day. This is going on throughout the week. And then after that, we've got building permits from Canada now. Last week, we had data from Canada, which was fairly mixed, pretty decent data, but not 100% fantastic, but it was okay. In fact, if we go and take a look at on the Friday, we can see we had unemployment change absolutely smashed expectations, but the unemployment rate stayed the same. Labour productivity ticked high, a little bit better. So it wasn't amazing, didn't absolutely smash out the park, but it was generally pretty good for Canada. But that doesn't really fit in with the overall view we have on the Canadian dollar, which is, of course, it's bearish. It's going to be heading lower over the coming months. So it doesn't really mean much for the trend on Canadian dollar going forward. We know that the Bank of Canada have got their little rose-tinted glasses on. They think that everything's going to get better in the second half of 2015, which is from now onwards. The market and the analysts and economists don't agree. So it's going to be very interesting. You have to keep an eye on this data. Generally, data from Canada hasn't been great so far. That was the first data point in quite a few weeks actually, that's actually meaningful and good. So I think we need a little bit more from Canada before we can start getting too excited and maybe buying Canadian dollar. And at the moment, I don't really see building permits adding or taking away from that too much. So Monday, I expect to be quite a quiet session, unless we get any updates. And again, just before we go into the week, I want to just mention a few things. First of all, we talked about last Friday. We had that stellar NFP reading. We also had average earnings ticking up to 0.3. Yeah, unemployment rate did tick a bit higher, but generally the market's viewing the whole thing as positive. Remember, the two metrics that the Fed have said there before they raise rates, inflation and wage growth. Both of those things have shown improvements over the last 2 weeks. So in that case, the market's getting quite excited about the possibility of the Fed hiking. Now, previously to that NFP figure, the market was pricing in December as when they were expecting the first rate hike to come. That's now been brought forward to October off the back of that data. So as the more good dollar data we get, I think we could be bringing that even further forward, possibly even towards summertime. I'm of the opinion that the Fed will hike a lot sooner than everyone's expecting because the data hasn't been that bad. Nothing's really changed from when the market was expecting the hike to come in June. So that's what you want to keep your eye on. So look for that dollar strength to last into the week. We expect that to continue. That's the first thing. The second thing is the Greek situation. On Friday, the 5th of June, the Greeks decided not to pay the IMF the 300 million they owed them. They've decided to bundle it together with a couple of other payments and pay it at the end of June instead. Now, there's nothing majorly controversial about that, but it does kind of give credence to the people that are thinking that maybe there'll be a Grexit. Maybe Greece will leave the Eurozone. If they're not paying on Friday, what makes everyone think they can pay at the end of June? It's all a little bit of a delaying tactic. Is it just a political tactic to give themselves more leverage, or are they having genuine serious problems that ultimately is going to lead to leaving the Eurozone? That's the question. So we want to look for updates to continue. That's been driving the euro dollar for the last week or two. Lots of volatility on that pair. I would personally avoid that pair. I'm avoiding it at the moment. So the two things to look out for going into the week, apart from the data we're about to go through, is the dollar strength, or the dollar to at least be supported, and after that stellar NFP reading, and also the Greeks. Keep your eye on the news feeds to see what's happening with this Greek situation, so you can react if anything changes. So let's go into the week. Tuesday the 9th, we've got business confidence from Australia. We've also got CPI from China. Again, two fairly important readings. I don't really expect them to move the markets, though. Market's not really focused on that. Another thing that could move the markets potentially is the JOLTS job openings on the US. Traders do tend to pay a bit of attention to this, and they're going to look for this data to line up with the positive data we had last Friday. So look for the US data. If the US data keeps coming out either as expected or positive, we just want to see that dollar support. We want to keep buying that dollar on the dips against those weaker currencies. We're looking for that trend to continue into next week. If you get a pullback on the dollar, look to buy into it. But of course, we want to keep our eye on those data points as well. If we go to Wednesday the 10th, we can see we've got Governor Stevens speaking from Australia. This is going to be pretty interesting to see what he says about recent data developments. We had a good GDP rating from Australia last week or the week before, but the quarter-on-quarter was good, but the year-on-year was actually worse than previous. So actually, GDP wasn't as good as it looked at first glance. And later on, we had the biggest trade deficit for 20 years from Australia. So again, not looking too great. It's actually looking a little bit recessionary over there in Australia at the moment. So the RBA have cut rates, this year. They've kind of said not going to cut any more, but the data will dictate that. So the market is going to be trading Australian dollar very firmly on the data. At the moment, it's looking pretty negative. So you want to be selling Aussie dollar, the Aussie dollar, US dollar on the dips, of course, with that dollar strength that's renewed. But we want to pay attention to what Stephen says. If he still keeps quite positive, if he's still quite, even a little bit hawkish or less dovish than the market's hoping, Aussie dollar could have a little relief rally. But ultimately, with all the data that's been coming out and the picture for the Australian economy, I'm still expecting that to be sold off on the rallies. And I'm still thinking Aussie dollar, US dollar will hit 75 at some point over the coming weeks and months. Next up, we've got manufacturing production from the UK. This is expected to tick lower to 0.1 versus the previous of 0.4. What does this mean? Well, at the moment, we are still bullish on the pound. We're thinking that the currency will continue to strengthen over the course of the next few months. Of course, that's dependent on UK inflation starting to tick higher. The last reading was negative. We can't have another negative reading. We need to start seeing improvements in the inflation reading as per the Bank of England's expectations. Provided we get that, I think the pound's going to remain supported, and it's definitely a buy on the dips. Certainly this manufacturing production information figure, if that comes out lower, yeah, pound will sell off, but I think it will recover. And I definitely, I think that buy on the dips mentality on the pound will continue at least for another week, as we've seen across the pairs. Obviously, that doesn't apply to cable because it's, you're pairing the pound with the dollar, which is the strongest currency. But look to pair the pound against those really weaker currencies, over the long term. For example, Euro pound had a big rally up to 73. I still think this will, that pair will sell on the rallies. But obviously, we've had a lot of volatility on the euro, so you want to avoid that. And I'm thinking trade things like yen, maybe Canadian dollar. Trade those things. The weaker currencies, maybe Aussie dollar as well. It's a bit of a wild one, but basically just look to match your currency. So look for something with a really strong sentiment and match it with a really weak sentiment. At the moment, the pound's got a pretty decent sentiment to the upside. Then we've got Carney speaking again. Interesting to see what he says, as ever, particularly in terms of when they're going to hike. I don't expect him to change his tune, but if he does, that could, of course, move the markets, if he does discuss monetary policy. But generally, I'm not really expecting anything new from that, and I'm not expecting that to be a particularly market-moving speech. However, after that, we've got probably the biggest market-moving event of the week. This is the RBNZ rate statement and press conference. Why is it such a big market-moving event? Because there's a lot of expectation that the RBNZ will cut their rate, okay? I think CME Group are pricing a 54% chance of them cutting. A lot of market participants have been thinking that could happen. As you've noticed, New Zealand dollar has been getting sold off heavily on that speculation over the last couple of weeks. So basically, it's a 50-50. So some economists, you can see here the Bloomberg economists, they all vote, they actually think it's going to remain on hold. But a lot of other economists, Reuters, for example, and a lot of other analysts surrounding the markets in the professional world have been talking about the RBNZ cutting. So we're in a situation of this. If they cut, we could have the market has sold New Zealand dollar so much that it's kind of nothing new. There's so much expectation around it. It's not really a shock. If they don't cut, that would be a massive underpricing of that. So the New Zealand dollar sold off for no apparent reason. So either way, we could see a rally on the New Zealand dollar. Now, the safest rally is if they don't cut. If they do indeed keep their hash rate unchanged, this could be a good opportunity to buy New Zealand dollar back, as I expect it to rally quite heavily in the aftermath of that decision from the RBNZ. However, the statement and the press conference will also be important, okay? Because if they don't cut, but then they say they're probably going to cut next time or something really dovish to that effect, of course, the market will probably sell off New Zealand dollars. If they're not as dovish as that, if they're not as dovish as the market's hoping for, and bearing in mind half the market's hoping for a cut on Wednesday, if they don't do that and they don't even offer any kind of promise of a cut to come, the rally on New Zealand dollar could last and extend, and all the losses we've seen on the New Zealand dollar pairs, we could see the majority of them, recover, basically. Think about Euro New Zealand. That pair has rallied almost back to 160, absolutely relentless off the back of that speculation and, of course, the stuff that's going on with Europe. If the Greek stuff gets resolved and the RBNZ don't cut, that pair, for example, could fall hundreds and hundreds of pips. So it's a little opportunity to watch out for after the dust settles on the Greeks thing, and also, of course, in the aftermath of this RBNZ rate decision. So you want to keep your eye on the rate, that's the first thing, and then, of course, keep your eye on the statement and the press conference after. But I've got a sneaky feeling this potentially could see a rally on the New Zealand dollar, almost whatever happens, because even if they do cut, the market's kind of priced that in and expected it. So it's just definitely the biggest one of the events, the biggest event of the week, one you want to watch out for. Yeah, that's where all our focus is going to be. That's where I'm going to be trying to make my pips. So that's where you want to be focusing some time and energy as well. If we move on to Thursday, we've got some big figures from Australia. We've got employment reading, employment change and employment rate from Australia, all expected to be better. 6.2 is as it was. 15.2 is obviously much better for the employment change. This could be marginally positive for the Aussie dollar. At the moment, the Aussie dollar is really prone to negative data. So now, if we get a situation where this data comes out worse than expected, we can expect that the effects of that to linger into the following session. That could give us some nice opportunities to sell Australian dollar if that occurs. So that could be something to trade out of, but only if it's negative. Then we've got industrial production from China. Again, as we've already spoke about, it's not really anything I'm looking for to move the markets. And if we scroll down further here, we can see we've got retail sales from the US and, of course, the weekly or 2-weekly unemployment claims. Retail sales is going to be pretty big. Again, we're looking for that to be positive. We need all this US data to come out at least as expected. If we get that, the dollar should remain supported. Even if 1 or 2 of these data points come out negative, of course there'll be a sell-off on the dollar in the immediate aftermath. But again, I expect the dollar to be fairly well supported. Unless we get a massive miss, unless we get some really big deviation or something happen in the news feeds through the week, I think the dollar will be supported. It will be definitely buying the dips into next week and into these data points. Finally, we've got Palos speaking from the Bank of Canada. Expecting to be fairly neutral, maybe keep his rose-tinted glasses on. Expect the economic picture to pick up through the second half of the year. If that's the case, don't really expect much movement on the CAD. If he turns a bit more dovish, we could see a sell-off. If he turns even more hawkish, we could see a nice little strength on the Canadian dollar because that'll get the market speculating. And the Bank of Canada are actually preparing to act in line with their expectations. So definitely want to keep your eye on his speeches, but generally not really expecting to change his tune too much. Finally, for the week, we've got Friday. We've got US PPI, we've got consumer sentiment from the US. Again, medium impact data points. Not really expecting to move the market too much unless we get big deviations, of course. Again, all expected to come out better than previous. And again, support the dollar through the week after that stellar NFP and wage growth reading. So it could just be a nice little boosting end for the week for the dollar. But even if we get a negative reading, I don't expect any negative sentiment to last too long, unless, of course, we get something happening like comments from the Fed or some really solid speculation of why the Fed won't hike in October. I expect the dollar to continue to be supported throughout the week. So that's the information. That's the events that I'm looking at. You can use that information with me. And also remember to keep your eye on the news feeds, particularly next week. We've got a lot of stuff going on. It's going to be imperative that you keep your eyes on that so you can have a good idea of what's going on and stay tuned into the market.